Good afternoon and welcome to this webinar where we're going to be talking about some of the government's initiatives around the latest economic situation, specifically the coronavirus, which has recently struck us all. As you'll appreciate, this is quite a fast-moving situation and things are changing very rapidly. So we're working very hard to try and stay up to date with the latest rules and the government announcements. So we're hoping we can give you a bit of an overview of that this afternoon. So what we're going to be talking about is three big topics, which are the job retention scheme, the business interruption loan scheme, and the support for self-employed individuals. But we do want to just talk about some other tax related measures that are there to support business. Now, to set the scene a little bit, the government is very keen, once we've kind of dealt with the public health issues, to support business through all of this, because they are very aware that for the economy not to suffer too much, the support of business once this issue has ended is going to be crucial, and a big part of that is employment and supporting individuals to look after their jobs and be able to pay their bills. So that's what a lot of these measures are focused on. Now, I will also say that because of the speed this is all moving at, there is very little detail out there on a lot of this. So whilst the government has given the big headlines and they have published some further guidance, we've still got a long way to go before we know the answer to all of the detailed questions. In particular, there is no draft law around any of this at the moment. So for the time being, we have to go with the spirit of what the government has announced and the information they have made publicly available. But it is important to remember with all of this that as the government gets further questions from the profession, from the news and the media and so forth, they are clarifying their position, and to a certain extent it is a bit of a moving feast. So these rules are being tweaked and changed as things go on. So anything that we talk about today, it is very important you continue to stay up to date with all of these measures and make sure you're acting on the latest news and guidance. I would also say there's a lot of speculation in the media in particular, and you'll hear different things from different sources. But unless it's an official source such as .gov or the HMRC website or other things coming through central government, you do need to perhaps take it with just a pinch of salt, because some of these things might be accurate, others may not. Now, I do want to start really by talking about the coronavirus job retention scheme. That's kind of the big ticket measure that the government have announced, and certainly one of the most important measures that's going to be out there for certainly any businesses that have employees. Now, these are unprecedented times, and it's fair to say that we've never had measures like this in the UK before. So this is a brand new scheme, and the government and HMRC are working very hard and very closely to get this all up and running. And whilst we are still waiting on detail, the reason a lot of it's not there is because they are still writing it as they go along. But nevertheless, we have had more information since it was first announced, and in fact recently, earlier in the week, we got a far more detailed guidance from the government about what this is going to cover and how it's going to work. Now, I'm sure many of you already know what this scheme is. What it's essentially there to do is help protect jobs in the long run. Now, in times like this, one of the first things a lot of businesses will do is they will look at their staff costs and whether they should be making costs, particularly through employees that may not be fully utilised. So the idea behind this scheme is to try and protect jobs that might otherwise be at risk as a result of this current crisis. Now, any business in principle can qualify for this, so anything from small private companies to large PLCs, and indeed public bodies and government organisations. Now, the principle of it all is looking at employees that cannot work as a result of the coronavirus outbreak, and that could be through any combination of different factors. Some businesses may just find they don't have a lot of work anymore. Contracts have been cancelled, customers have gone bust, or other reasons. But for other businesses, it may not be for a lack of work be able to go and get on with. It may be just a practical consideration why they can't, and the retail sector is a perfect example of this. You know, pubs, shops have all been ordered to close. They may have demand for their products and services, but ultimately, if they're not allowed to open their doors, all of their employees are sitting at home and can't work. So this is really what it's focused at. Now, the way the scheme works is that HMRC will essentially underwrite and reimburse a business for a portion of an employee's wages. So what the government are prepared to do is they will give businesses, in the form of a grant, 80% of an employee's wages, subject to a maximum cap of £2,500 per month. Now, what has been clarified recently is that £2,500 cap is for the gross wages of an employee. So the government will also underwrite and pay employers' national insurance and minimum auto enrolment contribution costs that the employer would otherwise suffer. Now, an employer has to pay an employee at least that amount that they get back from HMRC. So what you'll see commonly is this talk about the 80%. Now, from a practical point of view, what that really means is anyone earning less than £37,500 per year will not be subject to the cap. So 80% of their salary would be £30,000, which equates to the £2,500 per month. Anyone earning more than that amount will be subject to this maximum of £2,500. But as I mentioned a minute ago, that is plus employers' national insurance and minimum auto enrolment pension contributions. Now, the scheme runs from the 1st of March for a period of 3 months, so that's to the end of May. Now, the government have been quite quick in saying that the scheme will be prolonged if necessary. Now, we don't know what that means as necessary, but there's a lot of speculation at the moment that it may well mirror the lockdown period to a certain extent. So if lockdown ends up going past the 31st of May, it may well be this scheme is extended, but for the time being, we have to assume that it will end on the 31st of May, and that will be the end of it. Now, I mentioned the scheme runs from the 1st of March, and that was really in response to deal with businesses that may have already made layoffs or redundancies before the scheme was announced. So it only applies from the date that you furlough an employee, and I'll come on to that in a minute, what that means. But for any business that has laid off or made employees redundant since the 1st of March, they can be reinstated onto the payroll and instead be reclassified as furloughed. So there may be an opportunity there for any businesses out there that may have had to act quickly in the circumstances to revisit that now, bring those staff back onto the payroll and benefit from this kind of government grant in order to subsidise those costs and make it so those jobs can be protected. Now, it can apply for any employee that was on the payroll of the business as at the 28th of February. So what that does mean is there is a small group of employees that are potentially falling through the gaps here. So there are many businesses out there that will have employed people at the beginning of March for whatever reason, and if they're now revisiting that decision and thinking they don't need those staff, well, unfortunately they cannot be included under these provisions. The government will not be reimbursing any element of their salary if you do need to furlough them. So the next question really is what is a furloughed employee? What does it mean to furlough someone? Now, it's not really a concept that's widely known in the UK, but it is common in some other countries like the US. So furloughing an employee under these rules essentially means putting their employment on temporary hold. So it's a halfway house to a full redundancy. So when an employee is furloughed, they are still an employee of the business, they are still on the payroll, their work has just been put on temporary hold. Now, the business has got complete choice in who they furlough within their organisation, subject to some other considerations, which I'll come on to. But a business doesn't have to furlough all of its employees. It doesn't have to, there's no minimum or maximum number. It all comes down to a business's individual requirements. So a business may decide that a particular department within the organisation needs to be put on hold for the time being. There's not the work there. It might be a geographical area, or it could just be kind of a general headcount across the board that 10% of the staff are too much at the moment and they need to cut down in that respect. So going through this process, a business needs to have an assessment of their workforce and what employees are being utilised there is work for, and what employees perhaps cannot work as a result of the current crisis for any of those reasons I discussed earlier. Now, when the business has identified which employees they'd like to furlough, they will need to notify them in writing, and that's something that the government have recently clarified. In order to benefit, they have clarified there must be formal written communication to all affected employees. Now, one thing that's really important to highlight here is all the official guidance through HMRC, the government. It talks about the requirements in relation to this scheme and how to get the grant from HMRC, but we can't lose sight of the broader considerations. Now, this is all still subject to normal employment law. So what that means in most cases is the employer cannot act unilaterally. So we have to bear in mind things that we still have to make sure we're not discriminating against certain groups of employees, and we have to apply equality. So a business can't decide, for example, they want to just furlough all of the kind of employees that have got kids and childcare issues, or they can't say, well, we're just going to furlough all of our employees over a certain age. You still have to act fairly based upon good business principles. But we also need to bear in mind the employment contract position. So that comes down to a combination of employment law and contractual law. Most businesses will have a contract of employment with their employee, and it will set out terms. And in most of those contracts, you'll probably find a business cannot unilaterally reduce an employee's pay or reduce the working hours or otherwise lay them off. There tends to be a process. So what's that's to say is that all of this has to be done with employee consultation and agreement. So certainly a lot of businesses that I've been speaking to, the process they're going through is a consultation with their employees, explaining the situation. You know, everyone is fully aware that these are difficult times for everyone. We're all having to make sacrifices and it's difficult financially. And ultimately what this is, it's a job retention and protection scheme. The whole idea behind it is that employees perhaps are making a sacrifice now, and that could be in form of that 20% pay in order to potentially save their job in the future. In absence of this, a business may have to make much more difficult decisions about potentially making redundancies and those jobs going away in the future. And given the current economic uncertainty, I'm sure there are plenty of people out there that will want to retain their jobs rather than have to gamble that in a couple of months' time there's going to be that market available and jobs otherwise available for them. So it is important that those discussions are had, because if, in theory, just to give an illustration, if an employee is entitled to a salary of £3,000 per month and there's no provision in the contract for the employer to be able to unilaterally reduce that or otherwise lay them off without going through a redundancy process, then they are still entitled to that £3,000 a month, even if they do not work. So this is where it's important to have the discussion and, you know, perhaps agree in that case, well, if they go on to furlough, their salary could be reduced by 20% to £2,400 a month, but perhaps that's better than the alternative. Now, employees in some situations may not agree to that, and if that is the case, the employer is going to have to consider their position. what we'd strongly advise anyone that's looking to go through this process do is seek employment law advice. It's always worth contacting a specialist. You may have someone within your organisation that's your HR specialist that knows all this, or you may seek outside counsel. I think it's very important just to get all of this reviewed in the context of your contracts and make sure you're following a proper process. Now, whilst an employee is furloughed, they are not able to do any work for the organisation. So as I said earlier, it is essentially a temporary pause in employment. So they can't still be taking customer phone calls, they can't still be reviewing and dealing with all their emails. It has to be a genuine break in the employment responsibilities. Now, there are certain things that can be done, and it's pretty much limited to just kind of training and kind of CPD, studying, things along those lines. So many businesses may have apprentices on their books which perhaps might be furloughed. It is still fine for any such people to continue studying, accessing study materials within an organisation, as long as it isn't actually work. And HMRC have indicated they perceive that to be providing any services to the business or doing any kind of income generating work. So kind of studying is still okay in all of this. A furloughed employee can do other things outside the organisation, so they could volunteer, for example. The government are very keen to get as many people as they can volunteering to help vulnerable people or volunteering for the NHS. That's fine. It also looks like it's fine for employees to get other jobs in that period as well. So we're still waiting for a bit of clarification on that, but the latest guidance indicates that if a business agrees, they can allow their employee while furloughed to go and get another temporary employment. So it could well be a temporary job at one of the supermarkets, helping with the high demand there. But that will be with the employer's consent in most cases, as most employment contracts will normally have kind of provisions in there preventing that. Now, there is a minimum period of furlough that has to be applied to any employee, and that's for 3 weeks. So I mentioned earlier that the furlough period runs from the 1st of March to the 31st of May. A business can choose to furlough an employee today, for example, for a period up to the 31st of May, or a shorter period if they so wish. So they could do a period of only 3 weeks. Now, the furlough is somewhat flexible, so you could furlough an employee today for a period of 2 months, and after a month, business starts to improve, there's work for that person to do again, they can look to bring them back into the organisation at that time. But it's important that the business will only receive the government grant for the period the employee was actually furloughed. Now, the key question in all of this then comes down to, well, if HMRC are going to reimburse 80% of an employee's salary, well, 80% of what? How's that calculated? Now, for a salaried employee, that may be fairly straightforward. If someone's got a contract of employment that says they're entitled to a salary of £30,000 a year, well, that's £2,500 a month. It should be quite clear how much you're going to be able to reclaim. Now, the question comes, what about employees that have got variable pay? And that could be anyone, say, employees that are on 0-hour contracts or flexible contracts of employment that allow their hours to go up and down from 1 week or month to the next. There's been further guidance issued that explains that. For any employee that has variable pay, and that hasn't been properly defined, you can calculate the entitlement by looking at average earnings over the last tax year. So that's the 2018-19 tax year. Or you can look at the earnings for the same month in the previous year. So if we were looking at April 2020, for example, you could look at that employee's earnings in April 2019, and whichever of those two calculations produces the higher figure, that's what HMRC will provide the 80% reimbursement for. Now, it has been said in all of this that you do not include things like bonuses and commissions and fees that might be payable to an employee. So this could affect particular businesses. You could take anyone involved in sales, where a big proportion of their income might come through sales commissions. Unfortunately, that is not included within these provisions. So, you know, any employee that is reliant on getting a big chunk of their income from such sources, they may be more heavily affected by someone that's got quite a consistent basic income. But this will be helpful for people, say, on hourly work, where they might work 1 month, they might do 20 hours a week, the next month they might do 40 hours a week. It does provide that flexibility, and they do get a bit more out of it. Now, the way this scheme is going to work, the employer is initially responsible for paying the employee through the payroll. Now, I've been talking a lot about this 80% and this £2,500 cap. Now, under these provisions, the employer is free to pay. They have to pay at least that amount to the employee, but they could pay them their full entitlement or anywhere in between. So that's not to say you have to reduce an employee's pay, but it's our expectation, and indeed the discussions I've had indicate that that is what a lot of employers are going to be doing. They want this to be cost neutral to make it viable to keep any affected employees on. So the employer is responsible for processing that payment through the payroll as normal, even if it is at a reduced rate, and paying that employee. PAYE and national insurance will be applicable as normal. However, once that's been paid to the employer can submit a claim to HMRC for a refund of the amount they're entitled to. Now, this scheme is not live yet. HMRC are working very hard and urgently to get this up and running, but the expectation is it probably won't be up and running until the end of April, thereabouts. Now, I think for most businesses, that shouldn't make too much of a practical difference, because employers that have had employment throughout March, those employees have been working and they've not yet been furloughed. They're probably responsible to pay March's wages as per normal anyway. It's going to be far more relevant for April. So if a business has to temporarily furlough 20% of their workforce for, say, in the month of April, then they will be required to pay those employees on their normal date that they would be entitled to it, so end of April perhaps, and then shortly thereafter be able to reclaim a refund from HMRC. So there is a cash flow and timing implication there, and each business will need to manage that. We don't yet know the exact form of how the claims are going to be made. We know there's going to be some form of online portal, but that's about all we know at this current stage. And HMRC say they're going to issue further guidance as soon as it's available. So we hope to hear more within the next couple of weeks, and we will be providing further updates when that time comes. So with that's very much a brief overview of this scheme and how it works for employees. Just before we move on, I did want to just touch on the position of company directors. There's currently a lot of speculation and uncertainty about how it might work for owner-managed businesses. So I'm going to talk a little bit about the support scheme for self-employed a bit later, but just for clarity, that scheme does not apply to anyone that operates through a limited company. So the question is then, well, how do a director of a small owner-managed company, how do they benefit from these kind of schemes and grants that are available? Now, there's been limited comment from the government in this respect at the moment, but they have said in principle that a director of an owner-managed business could be furloughed and benefit from this scheme. Now, for the avoidance of doubt, that will only apply to the salary. Now, a lot of small owner-managed businesses will remunerate their directors through a small salary, and the remainder will come through dividends. Dividends are not included in this, so we may find that a small limited company might pay its director, say, £8,000–9,000 a year. So that's only what, £700–800 a month. It would be 80% of that figure that the government would be reimbursing if those directors were furloughed. But I will just add a little qualification there to say we really do need to wait until we get some further guidance in this respect, because I mentioned earlier that a furloughed employee cannot conduct any work for the period they're furloughed. Now, that could be practically quite difficult for owner managers in many cases, because how do you deal with a situation if you're furloughing yourself and a customer rings? Well, who is answering that phone, or who's replying to that email? So there's a bit of a question mark about that, but we're hoping that we will get further information in due course. But the message behind this is very much stand by your employees, and that's what this scheme is designed to do. So whilst we are still waiting on draft legislation and law, which is going to be very important in nailing down some of this detail and catching some of the nuances that perhaps aren't in the guidance at the moment, for the time being, all we can do is plan based upon the spirit of what the government is looking to do here. So the government is saying, if you treat your employees fairly, we will treat you fairly. So what has been made clear through this as well is that whilst this is going to be a self-assessment system and they're going to be relying on businesses being honest, HMRC do reserve the right to audit these claims at a later date, and the strong expectation is that they will do so. So businesses just need to make sure, if they are considering employees, it is for genuine business reasons related to the coronavirus outbreak, and they do have genuine downturn in work for whatever reason. As I mentioned earlier, could be practical implications about not being able to trade, people self-isolating, etc., just not having the amount of staff available to be able to open the doors, or anything else in between. So hopefully you found that useful. Please do type in your questions if you've got any, and we will address those at the end. But now I'm going to hand over to my colleague, Charlie Eve, who's going to talk a little bit about the Business Interruption Loan Scheme.
Hi there, everybody. I'm Charlie Eve, one of the partners at MHA Carpenter Box. I head up our professional practices sector, and I'm the lead partner of our funding team, which we put together at the start of the year to assist our fee earners, but also our clients with understanding of the funding market and what different funding options might be out there. Hopefully my IT is going to hold up. I've adjusted the camera a little bit, but I still seem to have some middle-aged, balding, grey-haired man with lots of chin staring back at me, but I'll try to ignore that and just carry on. So this afternoon, I'm going to be talking through the Coronavirus Business Interruption Loan Scheme. CBILS, I'll call it, for ease for later, and I'll try to cover the following areas. So the main purpose of the scheme and its features, what information you're likely to be asked for upon an application, and hence what you should start preparing for, what you should do next or now, and then I'll summarise these with a few action points. So the scheme is a business interruption scheme, and it's there to ensure that the business can survive through this unprecedented trading period, and then actually be ready to kickstart again once the trade turns back to what will be the new normal, whatever that might be. So the loan is set up for businesses who would not have security in place to cover borrowing. So if you'd have put the funding application in before, didn't have security, then your funding application might have failed as a result. So CBILS is for businesses who prior to the outbreak would have had a trade which would have been considered viable by the lender. This loan is not for businesses where you might have been in trading difficulty prior to the outbreak, where funding wouldn't have been available, though this loan is not for that purpose. Essentially, the loan's there to assist businesses who have managed their working capital under normal circumstances, and the loan enables that working capital to stay at a level which would allow the business to have a hot start again once the trade returns. That's what it's all there for. The government wants to make sure that the businesses, once we start to go back to normal, people go back to work, and places start to open again, that the businesses are able to start as immediately as possible. So time to talk about the main features of CBILS. So there's a facility available up to 5 million, and that's going to be available for repayment terms of up to 6 years. The applications for these are for business purposes only, and it's for businesses with turnover of less than 45 million, with 50% of their business having to be generated through trading activity, not investment activity. So the 80% guarantee is actually the scheme provides the lender, i.e. the bank, with a government-backed guarantee of 80%, and that's against the facility balance. This is subject to an overall cap per lender. So each bank will have a cap, and so at some point in the future, if everybody went to HSBC, for example, they would get to their maximum exposure, but other banks might have facilities available. So the interest and fees are actually paid by the government for the first 12 months. So the government will make a business interruption payment to cover the first 12 months of interest and any lender levied fees. So there won't be a arrangement fee to start with. Well, there might be, but the government covers it. So the SME businesses will benefit from no upfront costs, but also lower initial repayments. So finance terms. So the terms are actually up to 6 years, as I said earlier, but that's for the term loans and any asset finance facilities. But overdrafts and invoice finance facilities, the terms will be up to 3 years at the moment. There's been a number of discussions about security, and actually at the discretion of the lender, so it's down to the bank, but essentially the scheme can be used for unsecured lending for facilities of up to 250,000. For facilities over that, the lender must actually must establish that and there's an absence of security prior to a business using CBIL. So if the lender can offer some finance on normal commercial terms without the need to make use of the scheme, then they will do so. So just to be certain, primary residential property cannot be used or taken as security under the scheme. So loans under 250,000 will be unsecured. Facilities above 250,000, there might be some security required. It is worth pointing out that the borrower always remains 100% liable for the debt, whether they might not be able to repay it, but they are liable for it. So if it's a limited company and the company fails, it will be liable for the debt, but it might not be able to repay it. And then the guarantee is to the lender. So the government guarantees to the lender. So if the lender cannot get it from you, the borrower, then it will go to the lender and go back to the government to try and get it. So the scheme itself actually is initially set to run for 6 months at the moment. So that's when it's during that period that you'll be able to apply. So what information might we need to be putting together and thinking about now? We know from the experience of the clients we've been assisting at the moment that they're being asked the following sort of questions, really. So they've been asked, how has your business been disrupted? Because this is what it's about. It's about how has the business changed from the period prior to the coronavirus outbreak. So it might be that you've got staff issues, staff sickness, you can't get the work completed. It might be that your supply chain has failed. It might be that your demand has failed. So obviously in retail, some businesses aren't even able to trade. So their demand is now zero. You're going to be asked what's the expected income during that period. As I said earlier, for retail, that might be zero, but for some, it might be a significant reduction in income. You'll need to explain why you feel that there will be that reduction. For some, it will be obvious, and for others, it might need a little bit of explanation. You'll be asked what the essential costs are during this period. So that's the cost that you need to pay out to enable the business to run, even if it's hibernating for that period. You'll then be asked, well, what have you done to keep those losses, those costs as low as possible? The banks will expect you to have looked at what government support schemes or government support you might have applied for, a bit like the JRS scheme that Dan was talking about earlier, but other support that might be available. Have you applied for everything that you possibly can? Have you spoken to some of your suppliers to see whether there's any chance of holidays, rent reductions? Have you spoken to some of your staff who might not already be furloughed and thinking about reduced salaries or delaying pay rises, etc., to get you through this period? This is all subject to terms and conditions, obviously. Also, are there any funds that can be introduced to the business? Now, this is not necessarily from yourself, but there might be assets that you're not using at the moment that you might be able to sell, or you might be able to leverage, which will enable you to inject a bit of cash into the business, or any other loans from any sources that you might have been able to look to or achieve funding from. So it doesn't mean that you have to, but it's just making sure that you're going into this and you've thought about these things, because the likelihood is you'll be asked about them. You'll need to know what level of trading is expected post the COVID-19 impact. So that might be and what is the expected time frame for you to maybe get back to previous levels or just off previous levels? I mean, lots of people at the moment are talking about 6 months for that, but it will be relevant to your business, and you should have some idea as to why you're saying what you're saying, and the lenders will be hoping that you've had that. Also, just something to think about: if, for example, as I said earlier, you had maybe sold some assets to assist with a cash injection into the business, and that when you go back to trade again, you might need to replace those assets. You would need to think about whether there's any additional finance that might be required to replace that funding. So other things to think about here: forecast are forecasts themselves. So you need to think about what time frame. So you need to think about a 6-month time frame for the COVID disruption, but before you return to normal trading. So as I said, that time frame might be changed. It might be 12 months or it might be 9 months, whatever it is, but you need to have your base forecasts which are during that period, thinking about that time period in that 6 month, 9 month, 12 month period where the disruption's happening. You need to ensure that the cost-cutting measures that you've spoken about before are reflected in those forecasts, as well as any government support. You then need to look probably for a minimum of 12 months post that period, when your trading gets back to normal, to see whether to have a look at what cash requirements there might be, or whether you're in a position to start to repay any loans that you might have taken on. The assumptions of all of this need to be included with it, and we think that the banks will want to look at that. So why have you done what you've done, supporting that? Also, we're expecting that they'll be requesting up-to-date accounts and management information where you have it. So I suppose what's next and now? We're recommending that you speak to your own bankers, and in the first instance your relationship manager if you've got one assigned. And we actually feel that's the best way to enable you to have the best chance of getting any loan assistance quickly. because the bank already has lots of details about you, your trading history. They know your working capital requirements and how you've previously traded. I would just caveat, please be patient with your bank. For some of you, your businesses will have massively reduced workloads, and you might actually have a little bit more time than you might have ever had or have had for some time. But for the bankers, they're actually inundated with people contacting them at the moment to assist them with any loans, etc., as you'd expect. Now, most of the banks will be saying that they're going to reply within 24 hours, and please bear with them. We're very lucky down here on the south coast, and with all the main high street bankers and the managers that deal with it, they are incredibly good banking relationship managers. They care about their clients, and they care about making sure that their businesses are successful. So bear with them, and they will help you through that. And some of them have been absolutely fantastic through this process for some of our clients. When you contact them, your bank will send through an application, and they'll include questions similar to those that I've outlined earlier. And I'd actually suggest you start getting work on some of those answers now prior to any contact, so that you can be as ready as possible to put anything in place. What we are saying to most of our clients is that we're here to help, but a lot of the information the bank needs can actually be prepared by you as a business owner. And as I said, some owners may have a little less work to do than they have before, and actually be the best place to provide some of that information. We can assist with any further questions from the bank manager once the initial application goes in, and we can really assist there. We have actually increased our resources to enable us to assist with any financial forecasts where they're required, and we'll be looking to prioritise that work as it comes into us. In the first instance, we are trying to help the clients who aren't able to do it themselves with the help of their bank. So that's where our time is at the moment. So the other thing I'd like to say, it's a bit like Love Island, really. Don't put all your eggs in one basket. The CBILS loan is not the only finance out there, and we are asking our clients to share the information prepared for any application with us, so that our funding team can actually use that information and complete a soft search on our funding platform. And that might identify non-CBILS lending, which might be worth exploring if any application is not accepted. The search that we do doesn't actually impact on credit ratings, but it might give us a head start if any alternative finance is needed. I'd also just like to point out that Coaster Capital, which runs for our region here, has just released a 2 million fund for grants for small businesses too. And that's available until it runs out. So essentially the details of this are included on our COVID hub on our website, and that provides a grant from 5,000 to 25,000 for certain defined projects on the assumption that you employ between 5 and 50 staff and your turnover's under 10 million. That's really worth a look and apply if you qualify. So thanks to Coaster Capital putting some extra funding out there for businesses that really need it. So just to summarise on the action points, I think, as Dan said, also review our website for the latest information. It is comprehensive and it is being updated daily, so have a look. If you think that you have a need for a CBILS loan, then start to prepare for new information that you're likely to have to put together for the bank that I spoke about. There's going to be a document uploaded to our website which highlights these points I've raised earlier, or you can watch the video again if you can put yourself through it. Also, contact your relationship manager or bank contact to lodge your request to apply for the loan, and then send your main contact to MHA Carpenter Box your copy of any application you have made, and then they'll forward it on to the Carpenter Box funding team to do a soft search to see what else might be out there for you. And then finally, speak to your main contact at MHA Carpenter Box if you have any queries or require assistance, and we'll get the right team members there to help you out. I think that's it for the moment. I know there's questions and things that are coming on, so I'm going to pass you back to Dan to carry on from now. Thanks very much.
Thanks, Charlie. Right, so those were kind of two of the big things which we're getting a lot of questions about at the moment. But as I mentioned earlier, I just want to now cover the self-employed support scheme and just some of the other tax measures which have been announced to help the government. Now, in terms of the support for the self-employed, as I mentioned earlier, it does not apply to limited companies and their directors. So looking at the questions, we've been getting a lot through on that. And unfortunately, it is small limited companies are somewhat falling through the cracks at the moment. Now, there have been a lot of lobby groups that have been going to the government about this. For the time being, all they're saying is they don't benefit from the self-employment scheme, but they can benefit from the job retention scheme. But as I said earlier, I think for most company directors that may be of limited benefit. But there is lobbying going on at the moment. We may see changes in that respect. We may not. It is too early to say at the moment. So all I can really say is watch this space on that front. But in terms of what we do know is we have got this scheme for the self-employed, which is very closely mirrored to the job retention scheme. So this applies for anyone that is what the taxman would call self-employed, and that means you're a sole trader or you're a member of a partnership, and that could be an unincorporated partnership or an LLP, which you may have come across before. Now, it is worth noting this only applies to trading self-employed. So if you are a sole trader or a member of a partnership that conducts a trading activity, so that means, you know, selling goods or services to the public or other businesses, you would be included within this. But if your activity is more, say, investment in nature, for example, you're a landlord, you've got property rentals, that would not be included within the scheme. Now, unlike the job retention scheme, this is means tested, so you can only benefit provided that your income from self-employment is less than £50,000. Now, there are two tests of how that applies. In the first instance, the revenue will look back in the last completed tax year, which is 2018-19. If your income was your self-employment income was below £50,000 for that year, you'll qualify. If it was over that threshold, you can instead look at your average income from self-employment over the last 3 tax years, and provided that's below 50,000, then you qualify in principle. There is a further test that checks to see if your income from self-employment is at least 50% of your total income. So what this is really looking to achieve is look to find people that rely on the self-employment to kind of fund their lifestyle, their living costs, etc. So if for argument's sake you're a sole trader and you earn £30,000 in a year, if you've also got, say, £35,000 of rental income, pension income, other investment income, you wouldn't fall within this. So they're the kind of the means test elements that have got to be passed in order to fall within this. Now, there are a number of other criteria that the government have set out. Now, first and foremost, they're requiring anyone that wants to apply and benefit from this scheme to have submitted their 2018-19 tax return. Now, the deadline for submitting that return was the 31st of January this year. Now, if you're late, you won't be prohibited from being able to benefit from this, but they have set a deadline of the 23rd of April this year. If your 2018-19 tax return is not in by that date, you cannot benefit from this scheme. So it's really important, if you are late, to get that up to date and in as soon as possible. That does only apply, though, to the extent you were required to submit a tax return for that year. Now, you must have also been trading as self-employed in the 2019-20 tax year. So that's the current tax year that runs to the 5th of April. So you must have been conducting at least some element of trading activity during that year, and you must be intending to continue trading into the next tax year. Now, intention is a key point there, because the government is well aware that your business may be temporarily shut down at the moment, and you might be intending to get it all back up and running again as soon as this crisis is over. But that's not to say that demand for your business may have dried up and it may not be viable to continue. So it is an intention test. It is also important that at the time you apply for this scheme, you are trading or would be trading as a result if it weren't for coronavirus. So again, you may be the type of business that's had to shut down for the time being because you can't comply with social distancing, or work has dried up, whatever the reason. And then lastly, your profits must have been affected by COVID-19, which I think for the vast majority of businesses out there, it's fair to say that will be the case. Now, unlike the job retention scheme, there is no requirement for you to be able to show that you don't have work to do. There's no requirement for you to stop working. So a self-employed individual that's seen a downturn in trade, you might be a self-employed plumber, say, and your current work is being cancelled because your customers don't want you in their house, but some are prepared to do that, or your profits are affected. So you can continue working to the best of your ability and still benefit from this scheme. Now, the amount you can claim is very similar to the requirements and the amounts available under the job retention scheme, and it's calculated as 80% of your average monthly profits over the last 3 tax years, and that's the 3 tax years ending 2018-19. And that is also subject to a maximum cap of £2,500. Now, unlike the job retention scheme as well, this grant will be paid in one lump sum, so it's not a monthly payment like the job retention scheme. It will just be in one lump sum. Now, the government are working on this as well. It's not likely to be available as soon as the other scheme. It's expected that it will come in and be available around June time, but that could be pushed out slightly, and we may see towards July. Now, at the moment, HMRC and the government are asking people not to contact them in respect to their scheme. As I say, there's no way you can claim yet anyway. It's likely that there will be some kind of portal in order to make the claim, like the job retention scheme, but they are saying that HMRC will contact you automatically if you're eligible. Now, that may well be the case. When HMRC contact you though, who knows? It's very likely they're going to be inundated with this. They will undoubtedly have an automated process to write to taxpayers they think can benefit, but undoubtedly there will also be some that fall through the gaps. So as soon as you are able to make a claim through this, we will publish further guidance, and the advice will be get a claim in sooner rather than later, because we don't know how long yet it will take the government to actually pay money into bank accounts. And for self-employed people, this could be a grant of up to £7,500. So that's a decent chunk of money that could hopefully help through this difficult period. But nevertheless, you still have between now and what might be June or July to wait until you can get your hands on those funds. Again, the government are concerned about potential fraud and things there, which is why some of these kind of measures have been put in, and we've got the date for submitting last year's tax return, and you must have been trading last year. It is all going to be done semi-self-assessment, but again, HMRC reserve the right to audit these claims at a later date, so something worth bearing in mind. So I appreciate this isn't very helpful for those of you that are operating through limited companies. As I mentioned earlier, it's possible we could see an extension or changes to include you, but at this current time, that's what it is. So Again, we haven't had any of the detailed rules or law on how this is going to work in practice. However, because this is one of the later announcements, I would say the guidance and rules available are perhaps a bit more matured than some of the other schemes. So we do have a reasonable amount of detail on the qualifying criteria. So should be able to calculate in most cases how much you might be entitled to. So the message with this really is, if you are a sole trader or you're a member of a partnership that conducts this trading activity, it's definitely going to be worth reviewing to see A, if you qualify, provided your earnings within the limits, and B, how much you can be entitled to. So when the time comes to make a claim, you can submit one in a timely basis. And like with all the other schemes, we're here to assist with any of that process. So that's kind of the main measures that have been announced to help self-employed individuals, but there are some other tax-related measures which apply to all businesses. Now, the two main ones are, first of all, this is for self-employed company directors, everyone that's in self-assessment. For anyone that's got a payment on account that would be due for payment on the 31st of July 2020, that is automatically deferred to the 31st of January 2021. So that's the same time you would be required to make your balancing payment anyway. There is no action required on you in order to take advantage of that. That happens automatically. If you want to take an advantage, all you've got to do is simply not make your second payment on account. Now, it is automatic, it does apply to everyone, but the government have said specifically on this that if you can afford to make payment of your second payment on account, you should do so. But there would appear to be no implication or checking process for that. As I say, it's an automatic deferral and there are no interest or penalties for anyone that does not make that payment on the 31st of July. The other major announcement is the VAT deferral scheme. So that scheme runs from the 20th of March this year all the way until the 30th of June this year, and it applies to any VAT payment that would be due during that period. So for most businesses, that will mean VAT returns for February, March and April this year. The payments that would normally be due in respect to those returns are automatically deferred, and that deferral applies all the way to the 31st of March 2021. Again, it's automatic, you do not need to apply to do that. For any VAT liability that arises during that period, HMRC will assume you're not going to make payment. Now, you can choose to do so voluntarily, should you wish. There's no suggestion that businesses that can afford to pay should be paying. It's automatic, but a business could volunteer to pay anyway, should they so wish. One very important point to note here, though, is that for anyone that has a direct debit set up for VAT, that will be collected by normal unless you cancel that direct debit. So HMRC's official advice now is you should cancel your VAT direct debit if you do not want your payment to be taken during the period up to the 30th of June. So I said earlier, it encompasses all VAT payments that are due during that period. The only notable exceptions are anyone that operates VAT MOS, which is a special scheme for services which are supplied internationally, or VAT duties that arise from imports of goods. They will still need to be paid as normal. We don't yet have any detail of how the VAT deferral payment needs to be made in future. HMRC has said they will publish further information at that time, but there are no interest or penalties. So when we get closer to the time, we should have more information on exactly what needs to be done. But as I say, nothing needs to be done to take advantage of that. So our advice to business is kind of keep that money in the pot and make it available for other business expenses. But just for the avoidance of doubt, VAT returns do still need to be submitted as normal during that period. It is only the payment that's been deferred. Now, They are all the tax-specific measures that have been announced for particular taxes, but you may well be aware there is a general COVID-19 payment support facility that HMRC have launched. So whilst we do have these specific measures for VAT and self-employed payments on account, etc., many businesses will be thinking about their corporation tax liability and indeed their PAYE national insurance liabilities that are arising. Now, we do have this COVID-19 support facility, which can be used for any tax whatsoever. All a business needs to do is contact that hotline and explain the tax in question, how much is due, and why they can't afford to pay. And if it's for any reason associated with the coronavirus outbreak, and I do really mean any reason, it could be we don't have staff in to be able to do the work because they're all self-isolating, it could be our customers aren't paying us, whatever it might be. HMRC will agree a bespoke time to pay arrangement with businesses. Now, in most cases, they're initially saying they will allow up to 12 months to pay, but they will review each case based on its own merits and circumstances. Some businesses exceptionally may be able to agree longer than that, but many businesses may have a shorter period of time, so it will be assessed on a case by case. But the message there is, if you have any tax liability whatsoever that you may struggle to pay, the advice is to get in touch with that helpline, explain the circumstances and agree something that's going to work for you so you can pay at a later date, whatever the case may be. I would just say there is a very high demand for that service at the moment, and some have reported wait times of up to 3 to 4 hours on hold. So don't wait to the last minute to try and contact them. And it may be one of those things where you call the facility, you leave it on speakerphone on hold while you're going about doing your other daily duties. But it tends to be early in the morning or later at evening is when you've got the best chance of getting through. So the helpline is open from 8 AM till 8 PM in the evening. So there are lots of options available. A lot of them are cash flow related, which delay how long you've got to pay your tax liabilities. And indeed the loan scheme in order to support businesses, but the support for self-employed individuals and the job retention scheme, just for the avoidance of doubt, are outright grants. They are not repayable at a future date. And because they are grants, they are taxable income in the hands of the recipient. So for the self-employed, they will have to pay tax on that grant at a future date. But for businesses in receipt of the job retention scheme payment, it should be tax neutral, because whilst the income will be taxable, the amount you're paying to your employees will be relievable. So there's no profit for tax purposes there. So we've covered quite a lot here. There's a lot more detail behind all of this. There's only so much we can kind of fit into kind of roughly an hour webinar though. Now we have received a lot of questions. Charlie and I will now try and go through some of those and answer them. Unfortunately, we will not have time to answer them all. So if we do not get to your question, as Charlie mentioned earlier, please do feel free to get in touch with your normal Carpenter Box contact, who will be happy to help and advise you on any of these issues. If you don't have a contact at Carpenter Box, do have a look at our website. The material is updated regularly there. As I mentioned at the very beginning, this is a very fast moving environment. Things are changing daily. So if you want the most up-to-date information, please do visit the website, as we are updating that the moment we get any new information. But if you don't have a contact as well, you can contact us through our website on our info email address, which we can circulate later, and we'll be happy to help. But if I now turn to some questions, and we'll try and cover some of them. So just starting with the job retention scheme, a lot of similar questions we've been getting in there. Now, a lot of these are employment law related. So I've kind of given you a bit of an overview of some of the employment law considerations, but the strong advice there is, on these topics, you do need to get advice from a employment law specialist. So if you've already got one retained or that you use for your business, you may want to talk to those. If you need someone to talk to, please do get in touch, and I'm sure we can refer you to someone appropriate. But some of these questions, so someone's asked, is there a distinction between businesses that have more than or less than 20 employees? The answer to that is yes, it is an employment law matter. If you've got more than 20 employees that could be affected by contractual changes, such as reducing their salary and only paying them 80%, then there is a consultation period that normally needs to be adhered to. It is my understanding that in these circumstances there are ways around that by consulting with your employees in order to get this through with the time frame. But as I said, you do need to consult with an employment law specialist if those circumstances apply to you.
I've got one here, Dan. It says, do you have to apply for a loan with a bank that you business bank with? The answer to that is no, you don't have to. However, we feel that to get the application through faster and have more chance of getting it agreed, it's likely that the best way to do that is with a business bank that you bank with, on the basis that they have the history about you, they have a lot of information already, they already have all your details for the money laundering purposes, etc., etc. And we think that that will be the easiest way to get the loan acted on as quickly as possible.
I've got another question here that asks about furloughing employees for particular periods of time and kind of rotating staff in and out of furlough, as it were. Now, if you choose to furlough any of your employees, you must completely furlough them, so they can't work for any period of time. You can't have a system whereby, for example, you're furloughed for 2 weeks, then you work for 2 weeks and you're furloughed for 2 weeks. You have to furlough an employee, and as I mentioned earlier, you could choose to furlough someone for 2 months up to the end of May, but if circumstances change between now and then, you could bring them back into employment. Now, current guidance does say there is a minimum furlough period of 3 weeks, so if you end up recalling someone within that time, there is a chance that you will not qualify for the government grant for that employee. So I think the message there is try not to go too hard on your furloughing and furlough too many of your staff. If you feel you're going to need them, you should keep them on your payroll and employment for the time being. You can always review that again at a later date.
Right, I have a question here. If the bank decides that we could be approved for a loan anyway, does that mean we couldn't get the interest free for the first year? So we've actually had this with some clients, and it's down to the bank, but the bank that they've been dealing with has actually offered them a facility which is similar to that of the CBILS with a reduced interest charge for the first period. So that is down to personal circumstances, etc. But we are seeing that the banks are trying to help out clients wherever possible, especially if they've got a great history in the past. So don't be afraid to ask. Also, don't be afraid to ask about potentially current loans that are in place, and you might find that you're able to get some deferment of repayment or deferment of interest, depending on the relationship again and your repayment history in the past. So I'm not promising that at all, obviously, and probably all the bank managers that might be listening to this will be having a little go, but essentially I think it's the right thing to do, as you would with most of your suppliers. See what you can do. People are out there to support. The banks don't get anywhere if they don't have clients to look after in the future. So it's about getting through this sticky period to start growing again in the future.
Okay, I've got another question here clarifying how you calculate the entitlement to earnings. So I think when I spoke earlier, I said you look at average monthly earnings for the 2018-19 tax year. Just that's a correction. That should be the 19-20 tax year, i.e. the current tax year we're in, if you're looking at variable earnings workers. But there's also been a number of questions about potential redundancy and the interaction with this scheme. So as I mentioned, the job retention scheme is there to try and help save jobs in the future, but that's not to say that redundancies cannot still be considered at a future date. So it may well be that a business chooses to furlough some of its employees now in the hope that business will turn around and things will get better over the next couple of months. But ultimately, at any point, and that could be the end of the scheme or a point during, a business could make the decision that they need to make employees redundant and therefore go through that process.
Okay. I think we probably have to call it a day there, actually.
Yeah, just looking through, we've still got lots and lots and lots more questions. Apologies, we couldn't get to them all. We ran a bit longer on kind of the talking element. If you do still have questions, as I say, please do get in touch with your normal Carpenter Box contact and we'll be happy to help, or otherwise get in touch with us through the website and we'll take things from there. I don't want to sound like a broken record, but I think the key message in all of this is just stay up to date with the latest news and developments on this, because things are moving, and it's my expectation that over the next week, 2 weeks, further information will be announced on all of these schemes and we could indeed see further measures. So have a look at the hub on our website, which is updated regularly. Many thanks for joining us today, and that's all for now. Goodbye.